Hey everybody, welcome to the show. How's it going? How's it going this morning? Everybody survive the flush out? It's kind of crazy. We've only seen that kind of flush out like two times. Two times where we gap up like 1.4% and then turn around and do a giant flush out in the market. That's only happened twice. Pretty much twice ever with that big a move. That big a gap up, that big a drop. That's only happened twice. Number one, COVID. Number two, Liberation Day, which was the same size drop, pretty much exactly as COVID. What do we got going on? Is this the end of the bubble? You know, we'll go through what all happened here. Let's dive in here. See if we can't break it down for you. You know, yesterday turned sour. It did. And fear hit the lowest levels I've ever seen on the fear and greed index that CNN does. We were down at 6 last night. I was seeing people post on social media, X mostly, and that's crazy. Down at 6. People are scared to death. So, some days, like yesterday, you wake up, the sun's shining, the birds are singing, the market's absolutely screaming higher. Yesterday was one of those days for about an hour. Perfect Goldilocks morning. I mean, for those of you who aced high school economics, that meant everything was right as rain, Not too hot, not too cold. We had NVIDIA, the darling of the AI world, reporting earnings that looked like they were printed on gold leaf paper. Revenue was up, guidance through the roof, stock popping 5% at the open, NASDAQ flying, Bitcoin, well, it was kind of doing the Bitcoin thing. And to top it all off, we got jobs data that was just right for a little bit of a cut. Kind of supported that Fed cutting rates in December. And everybody's convinced. The party was on. Champagne's flowing. Beautiful thing. Let's go higher. New all-time high, baby. And then 11 a.m. hit. Adults kind of flooded the party. And in this case, one adult, Fed Governor Lisa Cook, well, she stepped up to a mic and, in the most polite central banker possible way, said, hey, you know that free money sloshing around that we call private credit? Well, all those hedge funds leveraging up in the treasury market, she said, yeah, we're a little bit worried that this might blow up in all our faces. And just like that, the music stopped at the party. The lights came on. You saw the girl you were dancing with, or the guy. Beer goggles and all. Huh? Everybody saw the deer. Everybody saw the freight train coming down the tunnel. What followed has been one of the most spectacular market reversals that we've seen since the COVID crash. The S&P went from up 1.4% to closing deeply in the red. It was a 1,100 point swing on NASDAQ. I mean, in the NQ futures, it was wild. It was a bloodbath. Disgusting, almost. It was really a bloodbath in a bull market, right? I mean, we've been ripping higher. Here's a story that you probably won't hear in the mainstream media news. This isn't just a random sell-off. This was another crack in the foundation of the story that the market's been telling for the past year. The story I've been talking about. Hopefully you weren't caught unaware. I kind of warned about the potential for that reversal right here during the show yesterday morning. I hate being right sometimes. It's not always the most awesome thing, especially when everything turns so red. So let's talk about NVIDIA and how the AI boom might be showing the cracks even more. On the surface, the numbers are incredible. They're projecting over $500 billion in revenue from their next generation chips. But when you look under the hood, things start to look a little sketchy here. Their order book starting to expand. But the thing that got people a little bit upset is that the days until they get paid on invoices jumped quite drastically, almost like 30%. And they were projecting it to get even longer in the next quarter. That means that's billions of dollars they can't book in profit, in earnings. I mean, when you really look under the hood, things are starting to look a little bit circular. I mean, their group of top customers has gotten really tight. Kind of like a group of friends that all get rich by selling each other the same Beanie Baby for a higher and higher price. You have to look at the players. You have Microsoft investing in these smaller neo-cloud companies, NVIDIA investing in the same companies. NVIDIA has hundreds of billions of dollar deal with OpenAI, which burning through cash like they could go just pick it up on the streets. And not unexpected, they're not going to be profitable until 2030. So where do they get all that cash to survive from 2025, even though we're at the end, to 2030? Who pays for that? Where's the money? Where's the profit? They're going to burn trillions of dollars and have no profit? But they're promising to buy those NVIDIA chips. Oracle, out there borrowing crap lots of money, building massive data centers on promises of OpenAI's success. Do you see the problems here? I mean, this is a beautiful self-sustaining ecosystem as long as there's no hiccup. And as one analyst put it, anybody who thinks that NVIDIA's extraordinary quarterly earnings release is proof that there's no AI bubble has no understanding of how AI works and the circular relationship that are all established in the key players. And yesterday, that music stopped. Where did the first crack appear? The canary in the coal mine? Crypto. Before the stock market even knew what hit it, Bitcoin was ripping below 90,000, almost down to 80,000 this morning. Ethereum was breaking down. I said Ethereum probably needed to go lower, and it might take Bitcoin down with it. Billions in leveraged crypto positions wiped out once again. It's a warning shot. The risk-on party might be a little bit cooked right now. So, where does that leave us? What's the investment opportunity here? Where do you go? Where do you play? We're savvy investors. We're savvy traders. We like to find the signal in the noise. Priced up. Defense is back in style. Stocks that have been getting hammered because they aren't AI darlings. We saw a lot of money flying into safety of government bonds. Yields were dropping, which means bond prices went up. And gold kind of managed to eke out a little bit of gain, even with the dollar being stronger. Bitcoin to gold ratio, it's plummeting out. Weakest point since 2024. Maybe telling you something. Now, volatility. Wow. Volatility was pulling back yesterday morning and then ripped right back up. It's kind of the fear gauge. We saw it explode higher yesterday. For options traders, if you're playing in the short term, it was definitely a playground yesterday with the largest November expiration hitting today. This is the largest November expiration in history. Right here today. Probably going to be some more wild swings. Incredible opportunity. We might get... This whole thing might chill out a little bit tomorrow. I'm seeing Cheddar that watches option flow. They're kind of predicting that we may see some more chaos through next week. And then possibly we've got some whales positioning for maybe a bounce in December. Can Santa come back to town? We'll see. Seems that those who expected more downside yesterday were bang on the money. And third, you can find those babies thrown out with the bathwater. So in one of these big market sell-offs, it's a sell everything, figure it out later scenario. It happens every time. Every tech company part of this bubble, every tech company not part of this bubble, they all got sold. So you can find stuff that has nothing to do with AI. They got sold hard and then they make tons of money. I mean, you got to do your homework though. You can find solid, profitable tech companies that got unfairly punished yesterday. Think of it as value. Value in a growth sector. And finally, the bears in the audience, this might be your moment. I mean, the technical picture has gotten ugly. We could be in for the big down that I've been talking about for a couple of years. It's just the beginning, though. The smart money, the hedge funds, they started the day buying and then ended up the day selling like crazy. JP Morgan reestablished its giant hedge play early in the day to absorb more downside to about 6,000. And there's opportunities to short the market if you have the stomach for shorting. But way more money's been lost betting on a crash than actually lost in a crash. Seasonal charts, they're bullish, baby. I mean, they tell you that from right here to the end of the year, it's typically our most bullish time of the year. But as we saw yesterday, market has a funny way of, doing the opposite sometimes. So stay sharp. Don't get caught up in the hype. The charts kind of tell us which way we're going next if you know how to read them. Look for the opportunities in this chaos. It's not really about being a bull market or bear market, because as soon as they call a bear market, that's usually when it flips, right? It's about being a survivor, keeping your risk in check, having a plan. I talked about that a lot yesterday. Got to make sure you have a plan to survive this chaos. And all trading involves a substantial risk of loss. So if you put your money at risk in the market, you might lose it. Past performance, not necessarily indicative of future results. Just because a system has worked in the past doesn't mean it'll keep working in the future. Be careful out there. The markets are cyclical. We go through cycles. We go through short, little cycles. We go through bigger, longer cycles. We go through weekly cycles, monthly cycles, yearly cycles, decade-long cycles, everything in between. The same market is not here every day. It's one of the hardest games in the world. This presentation here is intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling any financial instrument, including stocks, options, bonds, forex, futures, cryptos, treasuries. If you can't handle it, you need somebody to just tell you what to do, you got to hire and consult a financial advisor. But remember, this is the hardest game in the world. You're playing with some of the sharpest, fastest, most intelligent, well-informed, stubbornly irrational, in many cases unethical minds doing this thing we do called trading. You're up against the computers that react faster than you, the traders that have more experience than you, the funds that have more money than you, the insiders that have more information than any of us. We've got other people that'll just flat out tell you the wrong stuff. You've got your own inner voice that'll do its best to undo you, because we're very emotional about money. So if you have dreams about making quick, easy, fast money, probably should leave those behind. The first aim is to survive this game. Your first goal, learn how to stay in the game. That's the plan. You got to have a plan. You can only do this by mapping the territory, understanding how everything works, how the enemy, which is everybody out there, thinks and acts. We're on the same team here. You got to have a solid game plan. You got to pick your battles very, very carefully. Maybe you've heard me say, I'm a retired trader, just waiting for the best of the best setups. So if you're ready to play, let's look at where we can possibly try to eke some profits out today. It's a dangerous world out there, everybody. All right. We got a data dump yesterday. A little bit of one. The next one, we got all this stuff. We had unemployment coming in hot, which supports a rate cut in December. We won't get the December numbers until after the FOMC meeting on the 10th. So we've got next week, Thanksgiving week. We got a holiday on Thursday. We got a half a day on Friday. So it's kind of a wash. Like we get 3 good days and then, yeah, it's a weird week. Be careful out there if you have options that expire next week. Remember, it closes early. You don't have till 3. You have till 1 p.m. Eastern. The next week, relatively benign. But then the next week, FOMC on Wednesday, right there, 2 p.m. But they're not going to release all the data until after that. I think on Friday the 12th, I think is when they're planning to do it. So it's going to be a little bit of a crazy crap show. Sugar honey iced tea show, if you know what I mean. So be careful out there, everybody. Like the next couple weeks might be a little bit precarious. The FOMC could burn us down. So it's definitely, I don't know. You know, I don't know. We'll see what happens. Make sure you're subscribed if you want to chat with everybody on the channel during the live stream here. And let's take a look at the chart. What does ES say we're doing next? Yeah, this is S&P 500 futures. In case anybody didn't know. Oh, K-Web. Take a diversion here for a second. Ah, cool. Crash everything. Save. Please save. See if we can reload this. Bounce around too many tabs. Probably should just close some stuff. K-Web hitting a pullback. Oh, look at that. If you wanted 80% off, Black Friday starts now on TradingView. If you don't have a, probably ought to pop this up so I can show it off here later. So if you need some TradingView, here you go. I use this level right here, the premium. Look at that, $217 for 13 months. And you can stack these if you want to buy 2 years, 3 years, 4 years. What you buy, you know, I have remaining 915 days on my subscription. So there you go. Available now, 80% off. That's a pretty hot deal if you want TradingView. And nice 3-wave retrace. Back to ES. This is S&P 500 futures. And guess what? We're in the danger zone. Took the entire month. We're back to the October 10th lows. Right there. And that's exactly where I put this danger zone. We closed right at the bottom of it. As mentioned yesterday, if we get below it, we're probably coming down here. JP Morgan. Set up there. I guess downside risk absorbing countermeasures to absorb something down to 6,000. Is there a hedge? And be careful. This could be about a bottom though. Like the reason I put this orange here is it could be support. We came right back down. We made a lower low this morning. My buddy Zach Maines, you know, I say buddy, you know, just I follow him on lots of stuff. I respect his Elliott wave counts. Posted on X last night that if we get to an overnight lower low, does it count as being Thursday, or do the markets not bottom on Friday come into play if we make this low this morning? And can't say for sure, but this could set us up for more downside next week. More chaos. The warning signs are here. Diving on down, looking at so the reversal off the low, so far, not good. Niche kits, No bueno. That's still a corrective bounce. Just a smaller scale than the one we had at the open yesterday. Start back down, get below the 618, probably going on down. Daily roadmap line would be the target. Haven't even gotten to the 15-minute roadmap line. There's the 5-minute. We just got on top of it. If we can hold it here, 15-minute just above us, we need to get through that. If we reject off of that, yeah, so we got resistance all the way up, right? Start at the 1 minute. We're at support on the 1 minute. We're at support on the 5-minute. We're below resistance on the 15-minute. 30 minutes way on up here. Another step. You know, yesterday didn't act as any support at all. Hourly, you can see we bounced off the hourly and then took a nosedive right into the pavement. 4 hour, that's where we bounced off of yesterday. So if we get any kind of rally that gets through all the lower time frames, watch for resistance right there at that 4 hour. That's where we turn down once, turn down twice, 3 times, my lady. If we get rallying again, watch out for that. Rejection. And then the daily, of course, is support below us. So right now, we're in a downtrend, everybody, in the short term. All the way up to the daily, we're in a downtrend. Daily still an uptrend until we hit support and test it. Then do we hold it or do we fold it? If we get below it, this starts being more like what we saw back here, where we kind of held it and then broke through. And I warned that we were going to bounce and get a flush on down here. You can go look at that. I did that on February 28th, that show. You can go back in the channel history. You can go watch it. February 28th, I warned. When we started getting below right here, I was like, here's what's going to happen. And we went all the way down to the weekly roadmap line. Came down to the 3-day, poked on through, and actually hit the weekly. Right there. We can come back down here again. You can say, nuh-uh, all you want, but it's a real possibility. So far, this correction is not very big compared to Liberation Day, even though yesterday's market reaction was in line with kind of what we saw in Liberation Day. And then, if the weekly doesn't hold, this is where things get really ugly. We haven't been down here since 2011. We're due for a visit. Due for a visit, whether you want to believe it or not. So, cracks are showing. So the low time frames, here's our support for today, 65.50 on the futures right now. Resistance right now, 66.20. It's kind of the uprights for today. If we can stay in here, we can contain it. Just be a blase day into OPEX. The chances that with this proportion right here, that's an A, B, C type of proportion. And the odds are, with the downtrend going, continuation lower is probably what we're going to do. The daily roadmap is probably the support. So watch out. If we get below that 65.50, we're probably going on down next week. It's not a long way though, 6,400. compared to how far we've come, 6,400, not that far away. Right down here. That's where the daily is. That's the warning sign this morning when we poked down below that zone. That's why I drew this face on here. That's the first warning sign. We get confirmation breaking below it. This is probably more than likely where we're going. Probably like, give it like 75% odds. It's my confidence in getting down that far. Could it bounce in here? Sure. Time frame, you know, it could last well into first week of December. It could last, you know, we could keep this downtrend going right into FOMC on the 10th. For a while now, I've been talking about we probably needed some kind of big correction later in the year, maybe through Thanksgiving. That would set us up for a rally from there, but this liquidation's kind of like been pretty rough, like a lot. And what's crazier, when you go look at RSP, this hasn't been very broad. All right. April was a very broad sell-off. Like we liquidated everything. This little hiccup is nothing. This is very narrow. This is the equal weighted S&P. There has not been very many stocks participating in this correction. And you can see it right here. And we popped and dropped, and you know, we're right back to these lows we've had on here. If you didn't know this existed, this is S&P 500 stocks above their 20-day. And I was talking about we probably needed a touch of the bottom so we can go higher. Probably need that on the stocks above their 50-day also. If we could get this, it would give me some confidence that we can see a rally right there. And then longer S5TH, we're still sitting here. Hadn't hit the top. So we probably, just based on this, we might be able to muster a new all-time high again. But we're going to have to do some sort of correction. It looks like we're going to need a little bit more correction before we can muster that bounce. They're just market oscillators that kind of tell me, where's the energy? Right now, the energy was up, and we're probably got energy to go lower. The energy was up, probably got energy to go lower. Energy was down, probably got energy to go higher. There you go. Dun, 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 dun. Yeah, you can look at pivots. You know, pivots don't always work, but you know, sometimes they do. I keep pivots on my other chart. And looking back at the S&P cash index, where's the roadmap line? Right there. 6370-ish, right in the middle. This did get significantly lower, and it completed head and shoulders, which may take us, yeah, I mentioned this. It's head and shoulders right here. We did a shoulder, head, shoulder yesterday. Fake out, breakdown. If we complete this pattern, puts us right down here around 6330. If you believe in this pattern working out, if you believe in magic. So yet another kind of bearish omen, I guess you might say, in the markets. If we can get there and hold and turn, like we can go higher again. Like that's entirely possible. Got this high here. We'd have a low. Let's just say it does the optimal target on the S&P for the head and shoulders. What does that look like? Looks something like 7,000. If we got the bounce, got through the 618 level, which is hanging out right where we bounced off of yesterday, 6,700. We get above that, 7,000 comes into play, possibly up around 7,300. May have to hit that, retrace, retest the breakouts, and get higher. So it's still possible. Like, we haven't just wrecked everything. I'm still of the opinion we need a bigger correction, but we're not necessarily done on the top yet. So, NASDAQ almost got here yesterday. We got to the proportions. That's an A, B, C that I put on here. And we tagged it, baby. Even faster than I imagined. Now we could grind in here. We don't have to go anywhere. We can just grind until these things come together. It'd be about FOMC day. And right here, the 10th, be right there. So we could just grind these things together till FOMC day. Then, do we bounce or do we break down further? Russell, as I said, we might need to bounce off of the roadmap line to support going up to that 2,600. And that's exactly what we came down to do. I thought maybe that was good enough. Nope. Needed to go just a little lower. The bottom isn't necessarily there, though. We might have to retest this red zone where we had resistance breaking out of. We might have to come tag that. Retest that consolidation from back here in the summer before we go on higher again. Oil, here we go. That's where I expect it to go. Gold. Watch out. That would be what I expect to happen. If we get down here, that can rally. A lot of people are like, well, I thought gold was the safe haven. Why are people not flocking to it? Remember, this could be a sell everything and figure it out later type situation. I mean, that's what we're seeing over here. Ideal support, sliced right on through. Getting down to some deeper levels. Next one up. Right here. The low of the year. We're into it now. We're back testing the low of the year. We're negative for the year. And Bitcoin's negative for the year. Crazy enough, right? Like, we hit the all-time high this year and we're negative for the year. What the heck is going on? Usually we have 3 green years and a red. I mean, that's kind of 3 green years and a red, 3 green years and a red, 3 green. Wait, that's red. Still opportunity to pull this back around, but I don't know. Now, I don't like spouting off rumors and stuff, but heard a credible, somewhat credible, interesting theory that U.S. government needed this below 80,000, or needed it below 85,000. I guess that was the actual level. they said. Needed it down around 80,000, below 85, so that they could load up and start the treasury. That was like their price that they thought they needed to have to start treasury operations, funded up. So was the government complacent in pushing it down? I don't know. Or what, were big players part of the game so that they could put a price floor in here? Maybe. It's an interesting theory, I guess you might say. Maybe it plays out, maybe it doesn't. Definitely got high volume compared to what we've had. Yeah, look at this. The whole sell has been high volume. We'll see. Ethereum almost to the target. In fact, it tagged the, look at that, right in the middle. Could go as low as 24, but this is all I needed. That was it. That was all I was looking for. We could reverse here. This could be the bottom. I didn't expect it to go this fast. I thought it would kind of happen over the weekend, but that flush out right there could be what we needed. Now, there's still a chance we go a bit lower. A little bit lower, but we're in the neighborhood. NKD, all just scratching the top of the target zone. This could use just one more poke. And then we could reverse global liquidity. The money printer getting ready to fire up in Japan in a big way. Biggest stimulus package ever in the history of Japan, from what I understand, is getting ready to hit the streets. Could be inflation for the yen like you've never seen before in all our lives, I mean, ever. Dollar trying to break out right here. If we break out, get up to 102, that's where the squeeze starts, and we can see this thing squeeze back to new all-time high, or up to an all-time high even. I mean, we can see this thing rip a break above 102. Could kick off this monster move right here. And be absolute crazy. Ways you could play. You can bet against the yen, or bet with the euro, or just stay on the dollar index. This thing would be popping. Now, this is not big numbers here. Look, 28, 30. These are not big numbers, so we're not talking about huge moves. So you're probably not going to make bajillions of dollars on options unless you have bajillions of dollars of shares put in here. It makes it difficult to play with something like this that doesn't move big. Apple dumpling was crack-a-lackin'. Relatively unfazed yesterday. I talked about this being, this a lot of times is the flight to safety in big tech. If they've not been playing in the AI game, you wonder which AI darlings, which big tech don't have those AI darling investment craziness happening. Apple's just been out here grinding. Print money on their app store. Make money off all the AI apps that pass through the AI, or pass through their app store. And holding up really well. It looked like yesterday we were going to break out, but nope, right back down. So that's like a 1-2 setup right there. I actually kind of like that. We'll talk about it here. Gonna have to jump down a time frame or two. Take a look, see what we got. It's really close. So made a move up, made a retrace. Next move up could, what's it, 281. Be up here in this vicinity. Then we get a pullback and a final move. That's what it kind of sets us up for on Apple. Amazon is an AI infrastructure company. Be careful here. If we get below, like I mentioned that we may need to backtest this downtrend of highs right here. Like I mentioned that somewhere. We may need to do that. If we can hold it, that's bullish. If we get below that, probably doing this big down arrow over here. We just went a little higher up. That big down arrow puts us back at the lows from April. Google holding up really well. You know, for everything getting fleeced yesterday, these guys are winning. That hit the target yesterday, pulled back off of it, right back up to it today. 340 is the next upside. Everything's going to end up running on Google, looks like. Google's well positioned to kind of dominate here, even though they're not immune if some of the hyperscalers, you know, some of the customers of the hyperscalers start having problems. Google's not going to be immune to the fallout. Meta here, still sitting at this long-term resistance. I mean support, excuse me, long-term support here. That move up from April through August. This big three-wave retrace right down to that 618 level. This can support a measured bounce. Measured bounce would take us up here, like 1,000. Microsoft. Whoop, right in the uprights. Cha-chow. Look at that. I knew it was coming. Now, if we hold it, we can go higher from here. If we come on down, we're going to do like Meta and flush it on down somewhere in the low 400s. Wonder how my butterfly's doing. I need to go check on that. NVIDIA, probably coming back to the roadmap line. Roadmap line and breakout retest. I've talked about that for, feels like, since we got up here in August. I've talked about how we may need to come back down here. We decided to go take a trip up to the 1618 first, and now we're due for that retest of the breakout. It's not magic. Stuff happens over and over. We hit the 1618. Now we're due for a retest of the breakout. It's possible we hold this level right in here, but this is really what would be ideal. Retest that breakout. Support's going higher, but if we fail that, we could come way back down once again. Tesla just keeps chopping, and as I mentioned yesterday, this probably is indicative that we need one more dip right down here. Netflix, well, shoot, man. Getting there faster than I expected. Right down to the target zone. Possible it would come on down to 100. I thought that the split would be bearish. Turns out the market taking it down for us. If anybody bet against it on the split, made some money, let me know. Congratulations. Good job. I didn't do jack diddly on it, but Melly going lower. That's a three-way. Well, it's part of a bigger correction going here. That looks like a 1, 2, 3, 4. That's probably got more downside to go there. This looks like the first move down into the lows, wherever that was. Second move. Now we're getting. This could turn into something bigger on the downside here for Melly. Probably going to get some more downside here before we bounce and possibly get down to like 1600, 1660 into it. Not really phased. This is a tech company that has nothing to do with AI, really. You could say tech, I mean, software, accounting and taxes and all that sort of stuff. Tax season coming up. Typically, somewhat bullish, running in, I don't know. We get these sell-offs and then we get these rips. You look at it historically, sell-off, kind of baby rip. Sell-off, rip. Typically, tax time kind of beneficial for Intuit. Light didn't really sell off at all. So electrical products, that one keep going. We've talked about that being the bullish pattern. Race probably breaking down, probably going to need to move down lower. Be careful. That was a three-wave correction, continuation further down. Goldman Sachs probably needs to hit the roadmap line. GE Veranova grinding here, looking for a close back above the 618 at 616. 700 next upside. SanDisk probably needs to come back down to some reasonable level here. NVRI, that's a crazy pop. Be careful. Ross Stores, wow, look at that. Beautiful move. I was skeptical, but that's showing the power of these little retailers that have been just beaten down that are coming back around. Seeing people trade down to Ross Stores. Let's see, what is it? TJM? I can't remember. TJX? Can't remember what TJ Maxx is. Dang. Oh, because I got funds, duh. Yeah, there we go. Thought it was TJX. I was like, why is it not showing up? Yeah, this thing absolutely rocking. I've been playing Gap, expecting this one to rip. I had 28 calls sold against it for today. Second, we're gonna keep all the money on those and go again. If you sold the 18s down here that I pointed out, they were 40% ROI annualized. Well, kept all the money, baby. Stayed way safe. Could have even been more aggressive, but no need, right? 40% ROI with 1.6 million can get you into the 50K challenge right here. That's kind of my goal. So I just keep after it on here. Profit for the 3 months, profit for the 1 month. At $6,400 year to date. Almost 34.5. I mean 35.5. Nice. Just keep grinding higher here. There's my monthly profit loss. Just keeps going higher. Up and to the right. That's what we like to see. There you go. Making $6,400 in the last month. Cash flowing all my stuff. All right, back at it here. Flutter Entertainment. And let's see. Anything VRT. Coming back for the roadmap line. NBIS. Coming back for the roadmap line. FAS. Hunting for support here. Big long term. This could be set to take a nice big trip higher. Kind of hit our head a little bit here. Needing a few of the financials to retrace. This may need to pull back just a little bit more so we can go higher again. This is starting to look like a wave 4 to me. A wave 5 be a new all-time high. Then we get another pullback, same vicinity. Then we can get the bigger move up. WDC probably needs to come back to the roadmap line. IONX, 2x on IONQ. Reddit. This held up really well yesterday in the face of liquidations. If we can get back above the 234, this can go on higher. Short Bitcoin. Be careful, this can turn around on you viciously. Stuff that was declining today in the pre-market. Viva Systems. Getting the pullback. We may come back, retest this. kind of quasi breakout here. Find support there, and then go for new high up at 385. ESTC. Back to the lows. Be careful. This can break down. NAB. Small pullback, but probably going on out to 47. Apple Marble. Pulling back down to the bottom of the box. Got to grind through this. Otherwise, we can come all the way back down to the roadmap line, down to 87. Cord. And not enough candles to do anything with. Looks like it's ripping. AGQ. Watch for that to come back to the roadmap line. Strategies getting beat down. This can come back down to 150 and then 100 below that. So, but if Bitcoin can turn here, this thing may rip again. This is the proportions for a correction, right? This is, even though it, like, so the narrative really got bearish on this, that's all we really needed to turn it here. That's an A, that's a B, and that's a C to the exact proportions that I look for. If we can hold here, break back through, roadmap line, 618, new all-time highs would be in the cards here. Yeah, the narratives here are so bearish, but this actually supports ripping all the way up in here to the target. SQM. Yeah, I'm not thinking that the pattern is broken on Bitcoin yet. It's just a big correction that I said we needed. We hadn't really gotten a big correction at all in this whole move up off the 2022 low in November of 2022. Hadn't really gotten a giant big correction. This is kind of it. This can be popping all the way up here if we get above this 68 level. Kind of been watching this. Might start adding some there. T-Mobile. Still working on support. This is starting to look like a 618 retrace. That move up, that retrace. We hold in here. This can shoot us on up in here. Retrace, shoot us on up in here. Retrace, shoot us on up to the target. BMA, it looks like we are retest, you know, this classic. Break through the roadmap line, retest, and then go for the target, 138. Had a couple setups today. One of them really smoking hot, and this is not it. Look at this. That high, that low. There's the entry. Here's the statistics on this one. Like I said, this is not it. Let's see. 75%, 1.1, 41 trades. Just meh. Just average, but look at Walmart. Look at Walmart. This thing. Rock and roll, baby. 67, that's light. Light. Profit factor, 5.6. 68 trades. Let's rock and roll, baby. 68 trades. Oh, man. I want to see this thing right up to the target. Here's the high. Here's the low. Entry, 111. Let's freaking go. And we look at the last, let's see. Let's look at modern times. Just in the modern times, look at this, 91%. $9.1. This is probably going right up there. 111. Smoking hot. That is less than 24 trades, but as you saw, they have 68 trades in the history. Only fires off about once a year on average. Probably going to get us some upside. Now, this can last 7 months. So if you're trying to play short-term options like this week, probably not going to happen. There you go, though. I might get involved in that one because it's too good right there. Too good. Bias for the day. Gave you the uprights. We can stand between them. Nothing for today. We break out. Now, this is an OPEX day, so I don't really expect giant moves until late in the day. They'll probably have it contained in here till somewhere around noon to 2 p.m. Eastern. And then from 2 to 4, no man's land, anything goes, no holds barred, no rules, whatever. You can get a little crazy. They'll probably take it easy till noon, and then from noon on, it'll be a market maker's game. Take as much money from as many people as we possibly can. That's usually what happens in OPEX. The move coming in here does damage to the trading desks. Move it to where their advantage. They book as much profit as they can by noon, and then from noon to the close at 4 p.m. Eastern, market makers go after as much premium as they possibly can on OPEX. Be careful out there. Have a great day. I'll be in Discord. I'll be on Market Masters. Links in the description at 11:30. Jack and I will be talking about opportunities to try to make some money today. Come hang out with us. We'll see you again on Monday. Same bad time, same bad channel. Make sure you like, subscribe, pass it, share with a friend. Have a great day. Be safe out there.